how the numbers are looking for L&T. So let me break that down for you viewers. Given the fact that L&T reported steady set of earnings in the first quarter, revenue rose over 15% to 63,679 crores. This is compared to last year. Meanwhile, the profit after tax rose nearly 30% to 3,617 crore. Both top line and bottom line are in line with street expectations. Larsen and Toubro also said it received orders worth 94,453 crores at the group level during the quarter. We've also given to understand that the company added that easing of inflation, a favorable monsoon, and the RBI's 50 BPS reduction in the repo rate at its recently concluded June meeting could further aid the growth momentum in the economy. But as far as those numbers are concerned, what does Amit Anwani, research analyst, PL Capital, think of the same? Well, he joins me on the show this evening. Amit, thank you very much for taking the time out, joining us here this evening on ET Now. Let me quickly begin by asking, what do you make of these numbers? Amit, good evening. If you can hear me, what do you make of these numbers?
Yeah, I can hear you. So see, I think broadly, I think 15 to 16% growth is better than what I estimated, roughly about 63,000 odd crore revenue. And I think there was a positive surprise on the order inflow. The order inflow is roughly about 94,000 crores. I was expecting roughly about 75,000 odd crores for this quarter. And the notable order win has been done in the energy projects business, where the order they have received one BTG package order, and the international orders has been roughly about more than 50% plus. So broadly, if you see, barring margin, which is roughly about 9.9 to 10% on console, I was expecting roughly about 10.3%. But I think the dip is happening in the hydrocarbon business because of the variation in the projects which are getting booked, which is kind of seasonal considering this is Q1. And broadly, if I see, the commentary for Saudi Arabia still remains very strong, and we saw at the beginning of the year the company was giving roughly about 19 lakh crore order prospect, and we are seeing very strong order wins, which has happened in Q1 despite in first 2 months they did not announce major order, but they closed with 94,000, and today only we saw there is one more large order win which has happened. So operationally, I think quite healthy and stable quarter which they have delivered. Even the PAT number I was expecting was roughly about 3,450 odd crores, and company came up with 3,600 odd crores, better than my numbers. So all in all, better than expected on revenue margins and revenue and order intake, I would say. But margin was slight slip because of the order book, the stages of order booking in couple of segments. But I think overall healthy performance.
Looking at those numbers as well, with the margin seeing a slight dip, like you've also pointed out, any particular factors you think that were at play? If you could draw more perspective on that front, although you're given it in a broader aspect.
Yeah. So if you see margin, the EBITDA margin for the infra business, which I was expecting also to improve, the EBITDA margin for infra business was roughly about 5.7%. There was a 10 bits decline on a YoY basis versus 5.8% in the base quarter. And largely, there has been some cautious stance on the margin because of the legacy projects and a few large projects not achieving the threshold. And that's where the margins see some variation. I was expecting some improvement, but here the margin is 10 bits lower. And second, on the energy projects business, the EBITDA margin was about 7.3, 7.4% versus 8.7% in the base quarter. So typically they have been doing 8.5% margin, and margins in hydrocarbon energy business, which includes hydrocarbon, is expected to improve. But I think this quarter the impact was because of, as I said, the variation in stages of project booking. So this quarter, I think they did not book to the expectation it was estimated, and that led to the lesser reporting of margin. And third thing, also on the high tech manufacturing margin was roughly about 15.1% this quarter versus 17.4% in base quarter. But having said that, the energy and high-tech businesses are typically works on a threshold when the project is getting booked and margins are kind of see variation in Q1, Q2, Q3, Q4. So pretty early to see, but definitely margins are slightly lower versus what we expected. But on all other counts, the company has done a healthy performance.
All right, Amit. Thank you very much for joining us, sharing with us your perspective as to what you make of these numbers. Essentially, of course, apart from margin, in your purview, it looks like a healthy set of numbers. But for the moment, we leave it at that. But